As we move forward to enlightenment and more, ladies and gentlemen, we now begin with our first panel discussion, Economic Inclusion, Key to Financial Inclusion Success. And let me now invite on stage our panel chair. Let's put our hands together as I welcome Mr. Ajai Kumar, former CMD Corporation Bank. Let's put our hands together as he joins us on stage. Let's also welcome our panelists, Mr. Rajesh Bansal, Assistant General Director, UIDAI. Thank you for joining us, sir. Mr. George Antony, Managing Director and Country Head India, UAE Exchange India, also our partners for today. Let's also put our hands together and welcome on stage Mr. Abizer Diwanji, Partner and National Leader Financial Services, Ernst & Young. We welcome you, sir. We'd also like to welcome on stage Mr. Amalortavanathan, Deputy MD, NABARD. Thank you, gentlemen, for joining us. I'd like to request our panel chair to please take things ahead, and we're still awaiting one of our panelists, but nevertheless we'll begin the day. And ladies and gentlemen, I'm sure it's an early morning, so we have a lot more energy than we are putting in the applauses. So let's really put our hands together for the fantastic audience and for our panelists. We'd like to begin with the panel discussion, giving about the final 10 to 12 minutes for an open house question and answer session. So we look forward to that, a lot of interaction. And of course, may I now request our panel chair to take things ahead. Sir?
Morning, everybody. We'll take a few minutes till we get set. Okay, spaced out a bit. How do you want? You stand up, we'll have a chair. Okay. बैलेंस हो जाएगा ये मेरा ठीक है Hello. Hi, good morning once again, everybody. Well, it's been a very exciting morning today, and we have heard our Secretary, Department of Financial Services. In fact, he has very elaborately put as to what is happening in India. A very important mission is taking place at a very critical time, and it is the right approach the new government has taken to put financial inclusion into fast-forward mode. Any economic development requires economic inclusion. The topic of today's discussion is economic inclusion and how financial inclusion is a key towards economic inclusion. And once economic inclusion is there, we can look towards economic development. So financial inclusion, though it has been a buzzword for past few years, and a lot of things have happened, but has it led towards economic inclusion, which we aim for? has it actually taken forward the inclusion of people and the masses which can take country towards economic development. That is which is necessary to be seen, and the subject has to be taken in utmost sincerity, seriousness, and the mission mode which they have taken forward. This is something, a great thing is happening right at the right time, and we should discuss as to what will be the benefits accruing to it. Now, financial inclusion has been happening in the country for past few years, and we have covered quite a large bit of population. Out of about 24.5 crores of unbanked accounts, we have been able to open about 17 crores, but still about 7.5 crore accounts are yet to be opened, which includes about 6 crore accounts in rural areas, and as Secretary had said, the urban area has also been included now. So about 1.5 crore accounts in urban population have also to be covered by financial inclusion. Financial inclusion has up till so far been meant by giving the basic services to the unbanked people, which means providing them the products and services at an affordable cost to all those low-income groups, the haves and the have-nots alike, and to make their lives better. But then it has remained up till now only up to an opening of an account, but the facilities which we had envisaged to provide them some sort of a finance also, some sort of a credit, so that they can come out of the hands of the money lenders, they can make their own livelihood, that is yet to happen. With this new Jan Dhan Yojana, Prime Minister Jan Dhan Yojana, many things have to happen. And as we see that not only we'll be opening the accounts, we'll be providing them some overdraft facility on the maturity of those accounts, and also providing them insurance, micro insurance, as well as in a later point of time, it will be also seen that those the unorganized sector, that is the pension sector, can also be brought into the folds of the masses. Now, financial inclusion itself should lead to economic inclusion. As I understand, the economic inclusion broadly means that creating conditions of economic growth, financial literacy, empowerment, expansion of opportunities, appropriate skill training, better health care, and support job creation and ensure reliable and effective delivery of basic services to one and all. So financial inclusion is the first step. It has to go over to the next step, that is economic inclusion. Economic inclusion, as I said, is integral to economic development. Given a chance to succeed, people are likely to pursue education and participate in work and engage in activities that lead to economic growth. I recall some instances, and I think India today has that very much example today itself. I was reading that in America, out of 44 presidents, 26 of them have risen from very humble beginnings. It was possible, how it was possible, that the society was, this access to education, access to basic services was available to them, and somehow they came up to that ladder and became the president. Today we have seen that the Prime Minister, he himself has started from humble beginnings, and today he is the leader of the country. Now that is something which has to be brought into a mass and mission mode for everybody to take it with passion, so that financial inclusion can convert into economic inclusion, and economic inclusion can lead towards economic development, which can make India as one of the best countries in the world to which it is entitled. Now I feel that this Jan Dhan Prime Minister Yojana is a very effective and widespread implementation strategy which is taking place, and in a mission mode which it is happening, it is likely to give the results which we are envisaging. But then, if in case we want to have success, it is very necessary that the business models which we are having may not be the same. New and innovative approaches may have to be taken up, so that large population of India can be covered, not only with the account opening, but all banking services, credit facilities, skill upgradation, and employment opportunities. So as time goes further, we'll have to see as to how this financial inclusion can lead towards economic inclusion. And I'm sure that with the way that we are starting, it is being launched on 28th of August, the country is well set to proceed on the next level of economic inclusion. With these few words before you, I would actually hand over the stage to my panel members. I have with me Mr. Abizer Diwanji, Partner and National Leader of Financial Services ENY. I also have Mr. R. Amalortavanathan, DMD, NABARD. Mr. George Antony, MD and Country Head of UAE Exchange on this side. And we have a very important person, Mr. Rajesh Bansal, Assistant Director General, UIDAI. He will be telling about what UIDAI, Aadhaar, which is becoming the mainframe of financial inclusion, is all about, how it can help us to make a very uniform platform of financial inclusion and prevent any sort of a duplication or fraudulent activities which can take place in such payments which happen. First of all, I'll hand over the stage to Mr. Abizer Diwanji, the Partner and National Leader of Financial Services in ENY, to give his views about the financial inclusion which is happening in India, which is about to happen, and how it can contribute towards the next level, that is the economic inclusion in this country. Thank you.
Thank you, Jay. Thank you, sir, and respected audience and panel members. First of all, when one talks about inclusion, I think a precursor or a part maybe of inclusive growth is financial inclusion. So the most important thing is, how is India heading towards inclusive growth? It's a much larger platform to say, how do the individual in India get an opportunity to be part of India's growth? And financial inclusion can only be a part of that. What has been happening, I think, until now, to a great extent, and I would not generalize it, but to some extent, is that we have had a single focus of financial inclusion, and within that a single focus of opening bank accounts. So India today, as a result, has 60 million no-frills accounts, 2 million of which are operative. So the focus has been to open a bank account, but boss, if you open a bank account, how do you expect somebody to use it if there is no infrastructure for him to be made available? If there was no way he would pass the KYC in some cases. There was no way in which there was a credit coming into his bank account. Please do remember that while you open a bank account with somebody in every village, it's also important that there is a flow of money coming into his bank account. No person will by his own self go and deposit his daily wage earnings into a bank account. It will never happen. Because he's not used to it for the last 100 years and will not be used to it for the next 50 years unless there is a catalyst to change. So one thing that we have seen happening as part of this inclusive growth is this whole scheme that the Honorable Secretary spoke to us earlier. This is for the first time what I have seen, that there is a government-wide approach and not necessarily a bank-wide approach towards inclusion. So the government has come out and said, we will provide the commitment, we will provide, as the Secretary said, the publicity and the awareness, we will link it with financial literacy, and we will ask people that now come and set up a bank account. Again, along with that, the support system has matured. We have mobile ATMs, we have mobile phones, we have ability to transfer money, we have opened up the BC sector. So we have provided the infrastructure for people to use credit. Again, on the credit side, we are moving towards a direct benefit transfer, which comes straight into somebody's bank account for him to use. That is when you will see more active accounts, because you will see a direct credit come into his account, you will have the means which he can either use the money or withdraw the money or transfer the money, and there will be literacy around it. There will also be a reduced level of KYC that we are doing. Now they are saying that if you have an Aadhaar card, that's done, everything is over. And there has been a massive campaign of getting Aadhaar done, obviously my colleague will talk about it. But what is important to know is that we have now created or now going to create a national level infrastructure and a national level commitment to say inclusion should happen. And by the way, inclusion as far as banking is concerned, to a great extent, inclusion was something which was thrust into banking. You have to lend 40% of your deposits to priority sector lending, out of which 15% has to be directed lending. By the way, this is like, I give a simple anomaly. I was talking to somebody over tea in the morning. This is like somebody who is a wholesaler, who is used to selling tons of a particular product. If you ask him that you have to go down in that particular village and sell him half a kilo of the same product, absolutely uninterested, because that is not his business. So he has set up over a period of time an ecosystem where he will supply those tons to his distributor will supply the kilos to the respective kirana, and the kirana will sell the grams to the people. That is how it works. And by the way, it is not that it has not been implemented in banking here. We have had an ecosystem. We had regional rural banks, we have urban cooperative banks, we have now MFIs, we have NBFCs. These are nothing but last mile providers. They are the kiranas in the retail stores that we have. As long as the banks can provide them wholesale capital, it is their ability to go down the stream. And by the way, for them that model is a very profitable model. NBFCs are operating on a very good ROI, and if you provide them the capital, they will do even better. MFIs are making a reasonable amount of money such that the net interest margin on MFIs is capped. There is a 10% cap now. And by the way, if there was no demand, there was no need for a cap. There is a demand. There are people who are willing to pay because their alternative is to go and borrow money from a money lender. They want to do it, but they need the trust. For the first time they are entering the system, they need the comfort, which is the last mile connectivity that the MFI or the NBFC actually provides you. So we have an ecosystem ready, and that ecosystem is functioning. We need to fuel it much better. So it is not only the responsibility of the banking sector, it is the responsibility of financial services sector to make sure that gets delivered. It's a very important consideration one needs to do, and maybe as the particular financial inclusion program matures, I'm sure the government will think about it, to say how do we actually, we have a very good infrastructure ready. How do we fund that infrastructure going down? Today if you look at it, most people who applied for banking licenses because they wanted the liability side of the balance sheet. They wanted to create their own deposit base. If that deposit base is controlled by the banking system but allowed to flow freely into the lower parts of the ecosystem which actually supply credit to the inclusion, they will be more than willing not to have a banking license. They will be more than willing to operate in their niche segment because they are making very good money there. Financial inclusion is not a social obligation. It has to turn into a commercially viable proposition for it to be a success. So the points we're trying to make is all this is part of inclusive growth. Then you will have the people who are operating these micro institutions, and a lot of it is happening now, to actually give loans to entrepreneurs. There are specific segments of giving it to women self-help groups. There is a separate segment which gives it to the urban entrepreneur. There is a separate segment which gives it to MSME in the rural area. That is inclusive growth. That is when the chaiwala will become the Prime Minister. Because you will actually end up funding him, and his business will then end up growing, and that is how he will rise. So inclusive growth is actually a larger landscape, and financial inclusion is a part of that landscape, and that has to be understood. And I think the first rays of that is what I saw today. Because there is a national level awareness being created. People are told that taking credit is not that bad. They have been told that opening a bank account is not that bad. They have been shown that the technology is something that they can rely upon. That will come through the literacy part. And once they can rely on something like this, their ability to trust the system will go much higher, and that is how the usage will happen. Clearly we are seeing that. We are seeing people who have actually taken money from MFIs who have done very well. They continue to go back to them, take money. People who have taken money from NBFCs continue to do that. We expect that the banking system goes out and gives it to that small person. It will not happen. Because the banking system is the wholesale business. They will lend to the wholesaler. They will be comfortable doing that. That's how they've been doing. But they should be allowed to allocate resources to give it down the stream so that the stream can rent to an even smaller person, and the next stream an even smaller person. So really inclusion will happen at a local level, will happen by only specialized individuals who have got the skill to do it, who have the ability to go that last mile and do it, and whose profitability depends on going to that last mile and doing it. For a bank, it's an also ran. He makes money out of his 60% book that he lends to the commercial bit. For this is an obligation, they will do it, they will incur the cost and forget about it. So there are a lot of issues coming around. Why should I set up an ATM machine? It's not cost effective. Nobody comes to withdraw money. People come to withdraw money once in a month. Why do I have that system? You don't need to have that system anymore. Your kirana can have a POS and the money can be withdrawn. The mobile ATM can move around and cover 50 villages. That can happen. Now under the PPI scheme at least, which is not a banking, the payments provider scheme, you can actually have clubbed accounts. So the kirana will have 100 accounts, which will flow up into one central account being managed by the bank, and it is profitable for the bank. So this is nothing but an ecosystem that we are trying to develop, and I think once this ecosystem develops as part of inclusive growth, financial inclusion has to happen, because it's just waiting to happen. Thank you.
Thank you, Mr. Diwanji. I think you have very beautifully put as to how financial inclusion should lead to inclusive growth, and very correctly said that people have the capacity to generate employment and wealth, but they do not have the capital. So how capital can be provided? All organizations should come and come to the new models by which they can be provided. In fact, now I would like to come to Mr. Amalortavanathan from DMT from NABARD, and what I would like to ask him is to give views on the overall subject. But I would also like to ask as to, when I talked about the new models on which the finance can be provided and the skill upgradation and wealth generation can happen, NABARD has also been involved in the SHG financing in a big way. So they have spearheaded there. I think that is a very big, necessary and viable model by which financial inclusion can lead towards inclusive growth as well. And they have also been involved in the financial literacy, which has become very, very important in times to come, to see that this is spread across the masses to take benefit of the financial system. So, Mr.
Thank you, sir. Distinguished dignitaries on the dais and friends, I would like to take you through a different perspective of financial inclusion and economic participation. Long back I read an article about the political democracy and economic participation in India. So you see, the political democracy is one of the strongest in the world, where lot of people are participating. I think we have the highest number of participation in the political democracy. When it comes to the economic participation, notwithstanding the huge growth that we have seen, it has come from only a few select sectors or the enterprises. By and large, the large population stayed away from the economic participation. That is one of the very important things. Second is the financial inclusion that we are talking, like the Secretary said that financial inclusion started in 2008. It's wrong. It is almost 21 years old. What is financial inclusion and economic inclusion you are talking about? The SHG movement was started in providing, first it started with the savings. Savings is the basic product of any financial product. So it started with the savings and given a small dose of credit to the people, and it started 20 years ago. Is that not financial inclusion? They may not have an account. Now we are talking about different models of financial inclusion. That is one of the models where the individuals do not have an account, but the group has an account with the bank. Now my friend here, he said that it's a different partners in the chain. The banks provide finance to the MFIs, MFI provides finance to the SHGs, SHG provides finance to the individuals. This is financial inclusion. It happened 20 years ago, not in 2008. So let us be very clear about, we are having one of the world's largest financial inclusion program running in this country for the last 20 years, and we should take pride of it. And when all our partners, wherever we learnt this SHG movement in the world, all have failed. Because first of all, there was not savings linked. The second, it was not mainstreamed with the banking system, which we successfully did in our country. So therefore, financial inclusion is not just opening account here. It is the meaningful financial inclusion, which RBI has been telling that meaningful financial inclusion, notwithstanding the opening of account, is access to savings and credit. So therefore, if you broad base the financial inclusion definition into a kind of an access to savings and credit, it has happened 20 years ago, and we are moving in that. And we are adding more and more dimension to that. Technologies have come, players have come. We are including all of them into enhancing this outreach. So we are very well, I think we are poised for very well in that growth. But what happened is, by and large, we are talking about the microfinance or financial inclusion sustainability in terms of institutional sustainability. The lending institutions, the MFIs, NBFCs, are they making money? Are they sustainable? Things like that. But we don't bother about what happened to the people who borrowed money. Whether their enterprise is sustainable, that family is sustainable, the borrowing is sustainable or not. If we look into all these things, then it gives a lot of the insights into the suicides that has happened. Why there was a suicides happened? because the credit is not put into productive use. There are multiple borrowings. There are indebtedness. Indebtedness means that there is an access to credit in many sources. So therefore, what was lacking is economic usage of this money which has been given to them. And second is the bearing capacity of any individuals. Everybody cannot borrow. It's even the corporates are limited to borrow. They are not allowed to borrow indefinitely or any amount of money. Only that much they can borrow, which can be managed by them. So the families and individuals have borrowed it from multiple sources. That led to a lot of fiasco. So therefore, the financial inclusion has to follow with financial education. Financial education is like a family budgeting. It helps people to understand how to use this credit. So there are basically some of the other issues which I would like to touch upon is that first we have to understand why that exclusion takes place, because apart from the other reasons, there are some social exclusions. There are certain sectors of the society which has been excluded, some villages, etc. If you look at very closely. And there are geographical exclusions because they are all far-flung villages. It is very difficult for the people to meet with cost effectively. And there are size attractiveness. As my friend said, that if you have to dispense a small credit to the rural population or in a far-flung areas, it is no more viable. So therefore, these are all the reasons for the financial exclusion. But the technology and the involvement of the other players and partnerships, that will help us to solve some of these issues. And then economic inclusion needs 5-6 ingredients according to me. First is savings. Without savings, let us not talk about inclusion. And every households, we had conducted, NABARD has conducted a survey. Everybody wants to save something. It's not that I don't think any rural areas or rural population also is not willing to save. They are willing to save, however small the amount may be. Second is the credit. And initially, yesterday I was talking about the SHG movement. See, there are hierarchy of needs. Now, if you put in the Maslow's theory, they start credit. The first usage for going for consumption. All right, because that is a primary need. But after that, they should go slightly above towards more and more productive usage. Then when they use it, it is an individual enterprises that we are talking about at the household levels. That will sustain for some time. The sabji vendor or something, it will not sustain for long. It will sustain for some time. Then third comes the enterprise, where people come together and join or form an enterprise. That has got certain limitations because it may be 200 people, 100 people, one village, etc. coming together forming some enterprise. Then it has to move up to a corporate level. So once these corporates are evolving from this stage, then there comes the other social need, other needs of the Maslow, which talks about the prestige, dignity, etc. comes from there. So therefore, it has to go a long way. We are only starting at the bottom of the pyramid. We are trying about including and giving some small dose of the credit, etc. But that is not sufficient to sustain it in the long run for the enterprise. By overcharging on the credit, the institutions may come sustainable, but the fellow has to sustain in the long run. Then only we can say there is a meaningful financial inclusion in this. And then the institutional framework. Now, from the NABARD, I would see that there is a large sections of the institutions have been kept away from the financial inclusion mode. That is the primary cooperative societies. You all know that we have more than 90,000 primary cooperative societies. They are not part of the inclusion drive, simply because they are not having technology. So we have to make them eligible or make them inclusive first, the institutional framework. Keeping aside 90,000 cooperative societies which have crores of membership, you cannot talk about financial inclusion through the technology providers, etc. They have to be brought back. They have to be brought into the mainstream financial inclusion drive. And because they are not banks, that's another reason that is coming out. Because they are not banks. So what? SHGs were not banks, but they were giving the financial inclusion meaningfully. So therefore, these institutions, SHGs and these cooperative societies at the primary level, they have to be mainstreamed. Then it is possible, as Prime Minister says, it is possible to open so many accounts. And so many accounts, not necessarily with the banks, but also from the intermediaries. So therefore, once you mainstream the primary societies and their account is mainstreamed through technology, then it is the whole lot of difference can happen in our country. And then finally, I would like to touch upon, I have several points, but given the limitation of time, the measurement issues. As I was telling, the hierarchy, where are these financial inclusion? How many of them are having just open and no operation? How many of them taking credit for overdraft for only consumption? How many of them moving above that starting enterprises? We don't have data at all. We don't have data. Since we have the economy or the technology available with us, at every stage, we need to capture this data so that we can check ourselves how we are progressing in the economic inclusion. Otherwise, it is just providing money, like Dr. Reddy said once, that giving money to a SIG fellow to consumption is not called credit. Credit is that money has to be put into productive use. Then only you can call it as credit. Otherwise, it is simply money supply. So, if you are talking about money supply through the financial inclusion, it's a different ballgame altogether. If you are talking about economic participation, economic inclusion, then this money has to be put into productive use. And also, along with this money, the security aspect comes, the Maslow's theory. Social security, individual security in the form of maybe insurance, the personal insurance, or the asset insurance, income insurance, whatever. So all these are the security needs of these people. So it has to be bundled along with the savings, credit and insurance together so that the economic unit survives and it is sustainable on a long time. And approach of NABARD, I would like to say that has been that advocacy and cooperatives. Now we have successfully mainstreamed 240 cooperative banks with our intervention as a CBS enabled. Up to last year, until last year, they were kept outside the financial inclusion. And because of our efforts, we are able to mainstream 250 banks. But still, there is no solution found for primary cooperative societies. They are still not yet a part of the payment system. Unless they are brought under payment system, whatever we do on that, it's going to be still limitations in reaching out to the people. Cooperative society is the main plank that we need to work on that. And the second is the programs like SSG, JLG, various other programs also have to be recognized as a financial inclusion program. So far, government doesn't talk about the SSG when they talk about financial inclusion. These are not mutually exclusive. For heaven's sake, please think that it is a broader definition and it is the real financial inclusion that need to be accounted for. And then we have, for the time, now itself, now we have taken the projects like watershed, you must have heard, watersheds and wadi projects and producer organizations. In this, one of the main ingredients is that now we are going for individual account opening in addition to the group account opening. So that this mainly because of the DBT, the direct benefit transfers. Okay, because group account opening will not enable the direct benefit transfer. So therefore, we are doing this as part of the integral system. And then the partnerships, I think nobody else is working with such a large partnership as NABARD. We have more than 3,000 NGOs in our fold and all RRBs, all cooperative banks, all commercial banks almost. So it's a very big network that NABARD is operating through. And then we are also providing a lot of materials. If you see the even SSG materials, it contains about the social empowerment, that is part of economic participation, social participation. And also the financial literacy programs are doled out through the SSG meetings, etc. So therefore, financial literacy is also especially keeping the women in the forefront because they are the best savers and investors in our country, by culture. So therefore, these are to be taken on board when we are talking about financial inclusion. Unfortunately, let me repeat, unfortunately, we do not have proper database about all of the things that I am talking about. Let us see where we are and where we have to go. Unless we know where we are, we do not know where to go. And with this, I conclude here. If anybody has, we will have.
Well, thank you very much, sir. I think you have really given a very effective picture of what actually should be the roadmap for a better financial inclusion, including the financial education which you touched upon. But an important point about primary cooperative society, I think, is very, very relevant and has to be taken note of to bring them into the financial inclusion mainstream in a big way. And as you very correctly said, SSG is also financial inclusion and has to be recognized as one of the successful financial inclusion methods which have already taken place in the country and have to be taken forward with some more aggressiveness. Well, I would say, thank you very much, sir. I would say what I feel, things happen when revolution happens. There was an industrial revolution, then we came over to an internet and mobile revolution. And I think in this country, third revolution which is happening is the financial inclusion revolution. And if we do it right, I think we can make a name in the entire world that this is the country who did it, and how the progress has been based on this initial inputs of financial inclusion, which we are trying to do today, and for which we are launching it on 28th of August in a mission mode with full passion, enthusiasm and direct supervision from the highest leaders of the country. I'll now move to Mr. Bansal. Mr. Rajesh Bansal has been the Assistant Director General in UIDAI, and he has been spearheading this movement of financial inclusion in a big way, and has been trying to put the Aadhaar into the banking system, has been facing a lot of difficulties, but I think success is now on his doorstep and will happen much faster than it happened earlier. How UIDAI is essential for financial inclusion, how actually it will create a very strong platform not only for financial inclusion but for the entire country as an identity for them, for going anywhere, opening of accounts, social security benefits. And I would say, if I presume correctly, it may be just like a social security number which we have in other countries. UIDAI will become the most important number, and every person, not only the rural or financially excluded people, Aadhaar card has to be taken by one and all. That is my understanding. I hand it over to Mr. Bansal for his comments.
Thank you, sir, and thanks a lot to Economic Times for inviting me for this panel. So friends, you heard esteemed speakers before me, and as Mr. Ajai Kumar summed it up, this journey of UIDAI, I'm sure, is known to you a lot through media especially. It has been a difficult time, but we had right from 2009, and from the time that September 29, 2010, we issued the first Aadhaar number. We had only one vision which we have been trying to pursue, and that vision is what all of you share. So we are thankful to you for that. And that vision is what we share with 1.2 billion people in the country, is that everyone should have a right to prove their identity. It is not just a new vision, it is as a part of UN Declaration of Human Rights, a right to be identified. The person below the flyover at Moti Bagh has a right to be identified. Because if you and me, right present here in the room, were to walk out on Sardar Patel Marg outside and not have an ID in your pocket and my pocket, I'm not sure how comfortable, how confident you and I will feel if you don't have an ID in your pocket. So this is where the vision we started with, that each person residing in this country, the 122 crore people, should have an ID. That ID, we realized, can never be a token-based ID. Because if you are going to issue a card-based ID, it's not going to take us anywhere. So I'll weave this together into the financial inclusion story a little later, and the digital India, which you must have read about last week. So we realize that it has to be a digital ID, which has not happened anywhere in the world. Forget at that scale. So as we said, the largest online digital ID in the world is what Aadhaar platform offers today. We have, as Secretary DFS clarified, about 70 crore people already with a digital ID enabled in this country. And we are progressing fast towards the number of 100 crores. And by next year, we should have 100 crore people in this country with a digital ID. But let's look at the numbers, 70 crore numbers, and then look at brass tacks and nuts and bolts and how this works for somebody called Radha who stays somewhere in Timbuktu, in a panchayat in, whichever district in the country. So if you look at the number of unique banking individuals today, I am not sure. I would put my finger at a figure of 25 to 30 crores unique banking individuals. And today there are 70 crore people with a digital ID. So that's I thought I'll put some things in perspective. Now broadly, my other speakers and everyone, Secretary has said we need 3 A's for me to work. We need an account for everyone, right? Nobody has a doubt about it. So the discussion at whether we need an account for a household, 2 accounts per household, Our vision is 121 crore people with Aadhaar, a digital ID, and 121 crore people with an account. That's debatable. Some people don't agree that a kid should have an account, somebody who was born today should have an account or not. But if you look at the larger welfare schema in this country, a child does get some benefits, and ma'am would agree with me on that. So you need, the first day is an account opening. Second thing, you need an access to credit, which my esteemed panelists have already spoken about. And for all of this, you need an access point. The 3 A's. And now let's look at the terms of this lady Radha from Timbuktu. How is she supposed to get an account? My experience, I've seen that we will ask her to get an ID proof, a photo. And I would request some of you to, I'm sure some of you have already traveled, in a remote village, how are you expected this person to get a photograph and a photocopy? I've been to a remote area of Dhanbad, where for 20 kilometers there is no photo studio, there is no photocopier. And we expect this person to provide this so that there is robust enough KYC to open a bank account. Fair enough. It's the requirement of the PMLA, so we need a robust ID. But how do we solve this? And at the same time ensuring it is not costly for the service provider, whether it's an NBFC or a MFI or a bank or a prepaid issuer, for each of them. Because PMLA is becoming more and more critical, and India is a signatory to FATF. Access to credit. Why does this person Radha doesn't get access to credit? Because obviously she doesn't have a registry in the credit bureaus. I may have one. Mr. Ajai Kumar obviously has one. Everybody in this room has a credit history. So when I go to a bank X and ask for a loan, that bank just sends a query to CIBIL, and there, lo and behold, you have the credit score, and you tell me that, Mr. Bansal, I'm sorry, you already defaulted, please go back, do something about it. Or, hey, Mr. Bansal, your 15 lakh loan is pre-approved, which happens at my bank every time I use my ATM. Why? Because there is a credit bureau. But this Radha doesn't have an entry in the credit bureau. So, obviously, where is the question of giving access to credit to her? Third is access point. Where if you and I had a bank account and you and I didn't have a place to transact for 20 kilometers, I don't know how many of us will have a bank account. If you and I didn't have net banking, you and I didn't have a mobile in my hands, I don't know how many of us will have a bank account. You will obviously be happy keeping it in your, below your bed, in your pocket, or in your rickshaw. So these are the 3 A's which you need to take care of, and it has to work for Radha and has to work for the service provider. That's where the key, as I would say, the 4th A comes in, that is Aadhaar. Because Aadhaar is a digital ID, one can ensure that everybody can be uniquely identified. Everybody can be uniquely identified. Using eKYC, an instant account can be opened, and the account opening time will be reduced from 2 to 3 weeks today to 2 to 3 minutes, and it happens today. Low cost for the person, asan for the person, and cost effective for the financial institution. As far as credit goes, with everybody in 2015 having an Aadhaar number, 1 billion people will have a number, 1 billion people can be uniquely identified, and there will be 1 billion credit histories available for the banks, for the financial institutions to seamlessly access and allow credit to be afforded. Otherwise, it can't happen. Microcredit REST models could develop. I don't want to go into details of that. And with Aadhaar comes the ubiquitous factor of authentication. If you and I have to do a financial transaction, you and I use my signature or a PIN or a password. How do you expect a Radha sitting in Timbuktu to use a PIN or a internet banking or an, what should I say, a mobile banking or any other access point? What we have enabled is these 10 pins and the 2 irises. 12 pins available, ubiquitous to all 1.2 billion people. Today 700 million people have it, which means that everybody will be empowered to do a digital transaction, whether it is at a fertilizer shop to buy fertilizer, whether it is to buy seeds or to pay for grocery. So I think with this we'll stop and then we'll take the question.
Thank you very much, Mr. Bansal. I think the importance of UIDAI, which I feel is something which in times to come we'll realize has been very properly put by you. And with this, I now move over to Mr. George Antony, MD and Country Head of UAE Exchange, to tell us as to how NBFCs can really go forward in contributing towards financial inclusion and economic growth of the country.
Thank you, sir. Before going into NBFC, I would like to talk about this financial inclusion for the labor class people who have gone abroad to the Middle East and other countries, African continent. We at UAE Exchange from the year 1980, since we started in Abu Dhabi, had been opening accounts for all the banks in India for all these people who have gone abroad, and I would say we have helped all these customers to, educated these customers, actually it's not helping, educated them to open NRE accounts or SB accounts for their relatives, did the documentation work for them, and have converted all these people who are gone abroad. I'm talking about the labor class. We handle around 3 lakh transactions in a month of remittances, and that financial inclusion we had been doing from last 30 years. Now, coming to the Indian side of it, we had been very quietly and efficiently doing this credit for the last mile below middle class people, like through our branches in the country. We give credit to the NRI laborers, relative in India who receives 3 remittances. We are giving credit without this credit rating or without looking at their balances and all. And even in India, we for the domestic people, we are a little different from others. We are an NBFC, but we almost give personal loans like an MFI. We are giving loans to customers who doesn't have an income proof based on 2 relative guarantors. And we find so surprising that we talk about financial inclusion, we talk about bank accounts, but the ground reality is completely different. I'm not finding fault with anything, it's all evolving. The needy people, I'm not talking about the poorest, the reasonably okay people. They want money, they go to a bank. It's very difficult to get money for them from a bank because they don't have that income pattern to show in the bank, or they don't have a bank account in that bank. So these are the people who come to us, and I would say financial inclusion has got a long way to go, because opening so many crores of accounts which is just not operated, doesn't reach anywhere. I think this new initiative Mr. Modi has started is really, really good, because 5,000 rupees credit day planning is going to really make a difference in financial inclusion. From the NBFC side, I would say that the government, finance ministry and the RBI should equally give some weightage to NBFCs to be part of this financial inclusion program in the account opening process also. The NBFCs do lots and lots of work in the last mile servicing of this category of people. If they can be allowed in certain way to open accounts for these customers, I think they can make a big difference in financial inclusion. And it's possible with some technology controls and put in place. At least, for example, earlier there was no 82 in foreign exchange, there was only FFMCs. We went to RBI, explained that there are big players, well-managed, compliant companies which can be elevated so that they can do better service. Likewise, NBFCs who are compliant and performing well can be elevated to rank or to a certain category where they can open deposits for SB accounts for customers, by which if that is allowed, a new class of vertical will start for this financial inclusion in a big way, and that's a business opportunity for us. Plus we handle the last mile villages or branches. Most of the NBFCs work in the villages and MFIs work in the villages, so it can really help in financial inclusion, because meeting customer, talking to customer is the most important thing, whether it is an SBI account or saving account or giving credit, or which is hardly happening now. So that shortage can be covered by scaling up this to other financial sectors also. Thank you.
Thank you, Mr. George. We have heard to the experts from different fields, and very diverse, very interesting comments have come from them based on how they feel that financial inclusion is important, not an easy task, and we have a long journey to go. But then it can be done if it is done with commitment as well as with creativity. But this is a reform which needs to be done, which has to be done, and I think it is so important that once it is put in place, the infrastructure is put in place, I think we are into an accelerated mode for development in all segments of society. So with this, I would like to close the discussion and leave it open to the audience. If they have any questions, they can ask.
The audience is most welcome to ask questions. We'll pass around mics, and let's make this a very interactive session indeed.
Yeah, yes, sir.
My name is Professor Khurana, and I chair a trust and a company which has been in financial services training for about 1 million people in the last 10 years. Since a question has not come, so as we say in the classroom, either everything is understood or everything has gone above the head. I think everything is understood. So I address you a question. At this moment, is it a point of inflection then that we go towards a disruptive innovation rather than the incremental things we were doing in the past and we have been doing? And if it is so, one of the pillars which is not stated either in ma'am's paper, which is 3 pillars or 6 pillars in Mission Doc, is the soft part of new style of management and administration, where technology will play a role, education will be forgotten as it always has been, while every study in the world shows that financial education is the most important element. Right? I just address it in that fashion only.
We are doing this simultaneously with the financial literacy programs. If you see, the lots of efforts are going into the financial literacy programs, especially targeting the schools and colleges. And maybe as it may not be moving to the volume and the quantum that you expect that to happen, but it is happening, and increasingly it is found that the better financial literacy leads to better financial utilization from especially the formal sectors. The second issue is about the management. I agree with you, the present push even by the Prime Minister is again and again pushing the public sector banks. I know it's not to offend anybody else, please, it's my personal view, is that, see, a large number of the accounts are opened in the public sector banks. They are the mainstream, what they call and that also cost to this. And giving 5,000 rupees of overdraft to lakhs of accounts, who pays for this anyway? So the problem is, it is going to have a telling effect on the balance sheet of the banks. And tomorrow, the same Economic Times will be having a panel to discuss what is happening in our public sector banks. Please let us not forget that institutional infrastructure is more required than the services they are doing it, because services you can postpone and do it incrementally. But institution has to be strong all along. It cannot be weak today and tomorrow strong. Yesterday, Governor talked about the waiver. And yesterday, I got a call. Tomorrow, one bank has to pay 780 crores to me. They are saying that the waiver is declared, nobody is paying. So the issue is that the meddling with the financial system, okay, financial system can help to advance the social and economic needs of the country. But at the same time, the meddling with the management and the financial disciplines by different stakeholders is going to damage our country. This is one caution that we need to take. In the wake of financial, I think once the Reddy said, he said not to be quoted, but still I'll quote here because it's long back. He said, don't enter into the unviable transactions for the bank because everything costs. If you are putting one rupee money, you have to get something returned because it is a depositor's money you are talking about. Will all the depositors will keep quiet and then you have the NPS very high? Can they excuse banks not paying it? So the infrastructure is very important. The management is also very important. Okay, the literacy program is part and parcel of this, and then I hope somewhere we have to start. Financial inclusion starts first, maybe the financial literacy may follow, and the RBI is also working through the school curriculum about the financial literacy.
Well, frankly, any initiative has to be disruptive, otherwise that initiative will not work. More importantly, I think what we see this time, at least as a change, is there are far too many stakeholders. There are technology companies or providers, there are banks, there is the government itself, and I think literacy will have to be at the helm of it just to enable a more productive and profitable business. Because as rightly said, the public sector banks can be pushed and obligated to do something which may not necessarily be profitable. But the private sector will not do something which is not going to be profitable. For it to be profitable and for the technology companies effectively to participate, whether it is mobile, Aadhaar, which will include everything as part of an enabler, there has to be profitability. And profitability will come through literacy, not in the form of a social obligation to go and educate a banker, but it will come in the form of telling them what are the facilities you can take. They will ultimately realize that there is a credit giving process. They will ultimately try and draw them more towards the bank account. So literacy will happen not necessarily through a training or a learning process, it may happen more through a sales or services process. But there has to be awareness, otherwise if people don't transact, we'll be in the same 60 million bank account out of which 2 million have been utilized, which is not going to help anybody, neither the technology provider nor the bank nor anybody else.
I think one point is that, I always tell quote example of your mobile phones. How many of us learn mobile by going to colleges or something? It's all as you use it, and it gets the people learn also. And I think banking products, simple banking products are less complicated than your mobile.
Yes.
Well, we have time for one more question.
I am VC Sharma from D2K Technologies. As a learned panel has given a very good light on different aspects of financial inclusion, in my opinion, whether the time has not come that some initiative has to be done for reducing the cash transactions in our society, because as sir has very well said, that we learn mobile, the people have mobile, those who are illiterate and they can do everything with their mobile. So same way, if whether the time has not come to even in at least in metro cities or the bigger cities, the cash transactions are reduced through the public policy.
Sir, I'll clarify. If I get the question right, you are saying the time has not come that we are moving towards a less cash society, right, sir?
Yes, even I have seen that even in the metro cities,
yeah,
I have not seen any biometric enabled POS.
Yeah.
When we are having the 70 crore people are having the digital identity, right, so they can do the digital transaction also. But that is not being enabled, that's why they are not able to do.
Yeah. So, sir, as you are saying, I mean, it reminds me of my weekend shopping, and I was interestingly observing at Zara that I was fourth in the queue, and all the three people before me paid in cash, and I was the only one paying with a card, and I'm sure you know the reason. It's not they didn't have a card in their pocket, but there are other reasons, right? So that's one part of the story which is big in India as compared to, again, I'll give you an example which surprised me, that I was in Maldives about 3 months back, where every Kirana store I went to, because being a payments guy, I spent a lot of time doing this, without my wife knowing it obviously, is that every small 10 by 10 store was taking a card seamlessly. I mean, he didn't even blink an eye. So that's the difference. So that's one part of the acceptance infrastructure because of the parallel economy, right, acceptability of a transaction. Second part is the acceptance infrastructure and the incentive for the person to do. Third is for me to be able to use an electronic payment, I have my parallel economy issues. So all that needs to gradually get resolved. And I'm sure that's a larger fiscal and taxation issue than anything else. I'll honestly tell you, not just infrastructure, an incentive issue. Yeah.
I will only add to what Mr. Bansal said. See, in India, the growth of the debit card has been pretty fast as compared to the growth of credit card. So people are actually getting used to using of debit card for payments. And as you said, the POS machines are available across the country with even the smallest of the merchants. And it is a time will not be very far when we are actually advancing towards a much lesser usage of a society.
One small request, if you can make it, all of you please switch over to the RuPay card. Because it costs the system less than 1 rupee per transaction as compared to 25 rupees in case of Master and Visa cards. We will do a great service to the nation if we can at least switch over to the RuPay card.
I think it will happen. The way this card is being rolled out and the connectivity which everybody is enjoying, the RuPay card will be the card. And as Secretary said, we are the third country to do that. It is a major initiative taken by the country, and it will save a lot of money for the country as well as for the customers.
25 rupees versus less than 1 rupee.
I think we can close the discussion now, and thank you very much. I thank the panel members for a very exciting and interesting discussion which has given us, I think, insight into very different aspects of financial inclusion which probably were very new to us. Thank you very much.
Thank you so very much, Mr. Kumar, and I'd like to thank all the panelists. So the only problem with using a pay card always is that you kind of forget how much you've shopped. So for a lot of people like me who happen to be shopaholics, well, we need to control it somewhere. Let's put our hands together for the fantastic panel discussion, very, very interactive, and I'd like to thank our moderator. May I also, sir, request you to please present with a memento of appreciation to each one of our panelists, please. Mr. Kumar, thanking our panelists. Thank you, gentlemen, for joining us and making this such an interactive session. Thank you for joining us, sir. Thank you so very much, sir. And may I also take this opportunity to invite Vineet on stage once again and thank the presence of our panel chair. Mr. Kumar, we truly appreciate, sir. And may I request all of you to please join us for a group picture.